My name is Reva Davis, and today for my government project, I will be talking about the Department of Insurance and what they oversee, how they oversee it, and everything along those lines, and also the different requirements for each state. And I'm going to explain how that plays a role in the insurance policy of playing in a travel softball tournament. So the regulations in order to play in a softball tournament as far as insurance is gone is the same as having car insurance. If you don't have car insurance, you can't drive a car. If you don't have softball insurance, you can't play in the tournament or the game or whatever the situation is. Now, insurance companies in the United States are regulated primarily by the individual states and whatever the state sets forth as a regulation. There isn't really a federal regulatory agency that oversees all of the insurance companies. So the name of the insurance regulatory agency that typically watches them would be something along the lines of Department of Insurance, Division of Insurance, or Insurance Bureau. Something along those lines is typically what they would be called, and the agency is headed by a state government official that is typically called the Commissioner of Insurance or the Director of Insurance. Now, the Commissioner of Insurance or the Director of Insurance is elected in some states, but it's also appointed in some states by a governor. So depending on what state you live in would qualify for whether your Commissioner of Insurance is either elected or appointed by your governor. So a primary function of the Department of Insurance or the Insurance Bureau, Division of Insurance, whatever your state really calls it, is to ensure that insurance companies are operating in a state that is financially stable. So the reason for this is so that the insurance companies will be able to be financially able to meet the obligations to pay the claims that they've agreed through company and insurance companies agreements. So the insurance companies are required to meet certain financial requirements and to demonstrate periodically to the state departments of insurance that they continue to meet or exceed the minimum financial requirements in order to conduct the business. And so if the state of department or the division of insurance, whatever it's called, is realizing that the insurance company is either not in a state that is financially stable or somehow does not meet that minimum financial requirements, then the department has to shut down the insurance company. So the final responsibilities of the Department of Insurance is that most states have laws regulating the conduction of insurance businesses to make sure that all around the board is completely fair in the way that companies deal with applicants for insurance and policyholders. Now, the thing is that the Department of Insurance are the ones that enforce this so-called unfair trade practices, and when it's appropriate, the Department of Insurance has to get the companies to stop conducting whatever violates the law and impose penalties for those violations. And pretty much the rest of whatever the Department of Insurance does includes reviewing and approving the policy forms used by insurance companies and approving rates charged for various types of insurance to make sure that the compliance with state laws are pretty much straight as far as the regulation of insurance rates. So now that we've talked about that, the Division of Insurance and the Department of Insurance is who's in charge of setting the regulations and monitoring and make sure that all the insurance companies are good. We're going to explain how that plays into softball. So when you're starting a softball game and you're up at the plate, the umpires are talking to you saying, have good sportsmanship, be a teammate, and everything like that. Now, some girls don't play that way. A lot of girls play cleats up. They intentionally will try to find a way to take a girl out so that they can win. Or even sometimes the pitchers will intentionally hit the batter so that that batter gets walked. But sometimes that can injure a person a little more than you expect it to, especially when you get higher up when you're into high school and college and 18U levels. And so having the insurance is important because if you don't live in a financially stable state and you go and play a softball tournament there, what if your insurance company can't pay your claims that you already have insurance for? That's when the Department of Insurance would step in, fix that problem, and make sure that you can get a company that can regulate you and fulfill its obligation to pay those claims if something happens to one of your girls and you get hurt, or one of your friends or one of your players get hurt.